Assalamu alaikum, everyone. Hussain Qazi here, your facilitator for the Practice to Pass SBR 2020 exams, December 20 exams. Assalamu alaikum, everyone. I'm sorry. Assalamu alaikum, everyone. Hussain Qazi here, your instructor, your supporter for Practice to Pass December 20 exams. If you people are getting my voice clearly, do let me know. Do reply me on the WhatsApp group. Are you people hearing my voice? Do reply on the platform or do reply on the WhatsApp group. Is my voice clear to all of you? My screen is also much clear in front of you. MashaAllah. Alhamdulillah. Thank you very much. I hope that you enjoyed the yesterday's session. That was about the P2P SBR, and that was really the eye opener for you how to handle the examination. Candidates, today, inshallah ta'ala, we will drill down more things about the group and some aspect related to ethics. So now it's time to start. Now it's time to start. ACCA recommend you people to take up these sessions, to join this session through the laptops or the desktop. It's not recommended to take the session on the cell phone because cell phone normally have a distortion. Because of some reasons, you are taking the session on the mobile through the mobile data, not the Wi-Fi or other configuration aspects. So it's highly recommended. It's highly recommended to take the session on desktop or the laptop. The people who are taking the session on laptop, desktop, I don't think so that there is any problem related to the voice or the screen. So now start the session formally. Bismillah Rahman Rahim. I'm now going to start the session about the second day. Day 2, prepare to pass. Now let's start. Candidates, we are discussing, actually we have been engaged with the last session, day 1, that was about the group accounts. What is the role of the group accounts? What is the role of the group accounts in SBR exams? You can get easily 20 to 25 marks. Section A, question 1, and other part as well. That is what we discussed earlier. Related to the group accounts, what is about the sequence? The sequence is that investment in shares, control, business definition, and then acquisition accounting. We have done this, the complexity related to control, that's IFRS 10. We have done IFRS 3 business definition. We have already discussed some limited part related to acquisition accounting. And we are going to drill more things about the acquisition accounting. Once you get control and identify the definition of the business related to an entity from where you control the business, you will have to start the acquisition accounting. You will have to start the acquisition accounting. Acquisition accounting having four components. That is the timing, that is identify the acquirer, goodwill, and other. This is what about calculations. This is what about the calculations. Now, candidates, what is the expectation of your examiner? The expectation of your examiner is that whatever the calculation you make, whatever the calculation you make, you have an ability to explain the answer as well. And we have discussed a lot about this, the mindset. Now, start some important things. What we discussed in yesterday's session, whenever you start the acquisition accounting, whenever you start acquisition accounting, you normally call the term goodwill. You start the calculation with the goodwill. And actually, what is how to calculate the goodwill? How to work out the acquisition accounting? Accounting standard says acquisition accounting is based on single entity concept. It's based on single entity concept. What does that mean? You will have to assume that now the parent and subsidiary not considering two entity, they are considering one entity. Means acquisition accounting, parent and subsidiary accounts should be merged, and merged in a manner that all the net asset of the subsidiary at acquisition should be debited at its fair value. By single entity concept, the cost of investment should be closed. And do remember, parent having a responsibility to consolidate. Do remember, parent having individual books, subsidiary having individual books. The new books called acquisition accounting. This is the new books. There is no adjustment of IFRS 3 in the individual books. That is the key point. The new books open with these entries. Fair value of net asset debited, cost of investment by single entity concept closed, a new account start with the NCI. Do remember, either your subsidy 70%, 80%, 90%, 100%, even low voting rights 40%. You have to consolidate 100%. Whatever the rights you don't have, that's called non-controlling interest. For example, 20%. Fair value asset debit, new account create NCI, cost of investment, and any balancing figure that is called goodwill. Normally, goodwill having debit side, the goodwill have no place in the individual books of the subsidiary. But in the consolidation, now it's become identified. Now it's become identified. Goodwill, normally in the debit side, if it's debit side, that is called intangible asset. Goodwill having no life, goodwill having no life means indefinite life, indefined life. and annual impairment test. We will discuss detail about the impairment test in the today's class. Sir, is it possible that goodwill having credit balance? Yes. If goodwill having credit side, that's called bargain purchase option. Accounting standard says if in your calculation, if in the calculation goodwill developed in the credit side means you have purchased the business in the lower amount, with the lower amount. Actually, it's called gain on purchasing, gain with the value less than market value. So standard says two things about it. Number one, you have to recheck your working. About recheck means you have to recheck, have you calculated the fair value in the right way? Have you calculated the NCI in the right way? Have you calculated the cost of investment in the right way? If yes, recheck. If yes, any of the negative goodwill, immediately credit to income statement. Means we have to make consolidate in the accounts. We have to make consolidate in the accounts, and we have to make consolidate in the accounts, and any credit amount immediately credited to the income statement and to CRE in the consolidated books. In the consolidated books. And candidates do remember that. One very important example I'm giving to you. For example, you're standing at 2018 year end and you acquired the subsidy 1st January 2018. So if your reporting date is 2018 year end, you have to start your acquisition accounting here and then move toward the reporting date. In case of negative goodwill, you have to immediately credit at this point and report as an income in 2018. That is the key point. For example, you're standing subsequently 2019, next year. Your accounts already published 2018. Now reporting year end 2019. What you will say? For example, you are sitting in the examination hall, there's a question 2019 year end reporting, but you have acquired 2 years ago. You must say that when we purchased the subsidy 2 years ago at the acquisition, we have already credited goodwill to the retained earning. Goodwill to the retained earning. So that is the key point. So candidates, move on further, moving on more further. This is what the goodwill is actually about, start of acquisition accounting. And do remember, if any case you are going to sell your subsidy and control lost, that acquisition accounting, this is called acquisition accounting, become reverse in same manner. Means goodwill should be deconsolidated, fair value of net asset at disposal deconsolidated, NCI should be closed, and whatever the amount you will receive, you have to calculate the gain or loss accordingly. Individual books are different, consolidated books are different. That is the key point, candidates. That is the key point. I hope that all of you people are with me and you are getting the point whatever I'm saying that. Are you people with me? No, don't worry about the derecognition. Don't worry about derecognition. Don't worry about derecognition. Don't worry. About the derecognition, I will discuss about 30 minutes with different questions. Are you getting that? What is the meaning of acquisition accounting right now? Simple. No, it's not about the derecognition. My question is only about the recognition aspect. Are you getting the point? What is the aspect of the acquisition accounting matter? Just the matter of the acquisition. Candidates, very simple concept. I am telling you one more time. If you recognize the goodwill, if the goodwill having a debit balance, very simple. If at acquisition accountant candidates, at acquisition accounting, an acquisition date, goodwill having debit balance, it is called intangible asset. That's so simple. And that should be capitalized. But if goodwill having credit balance, that is called bargain purchase option. That's simple. And bargain purchase option should be immediately credited to income statement. That's all. That's so simple. If your exam questions are goodwill normally debit side, that should be capitalized. It's a credit side, it should be immediately credited to P&L. Is that clear? No, Mr. Thala. Do remember, impairment is only about asset. And asset means debit balance. If goodwill having credit balance, it's not an asset. It's not an asset. So if it's not asset, no need for impairment. Okay, that's good. That's very good. Okay, candidates. Furthermore, listen carefully. Furthermore, now the very important concept. Whenever we calculate the goodwill, what we need? We need the net asset of subsidiary fair value at acquisition. And number two, the cost of investment of the parent, that should also be fair value. So our next 30 minutes target is to discuss about or complications related to net asset of subsidiary at acquisition and the cost of investment related to parent. So first we will discuss about this point. Number two, this point. We already discussed in our last session, yesterday's session, a past paper related matter, that subsidiaries net asset should be at fair value and the net asset should, whatever the asset consolidate should be identified, plus that should be at fair value. It may possible that some of the assets are not the part of individual books but become the part of consolidation, because in consolidation it's become identified and the value reliable estimate, example goodwill, example brand, example further example customer contracts. That's a past paper we have already done. But one more complication that we need to consider, sir, is it possible that subsidy net asset should be at fair value? Subsidy net asset should be at fair value. So fair value measurement with reference to IFRS 13. Fair value measurement with respect to IFRS 13. Is there any complication related to the matter about sorry, fair value complications of IFRS 13 with groups? Is there any complications? I must say yes. An examiner at one point with the question of September, December 2019. That is what we are going to discuss today. A complexity. So our first target related to the fair value aspect about this matter. Zubair Saab, you asked me deferred tax asset. Hold it. I will discuss the matter of the deferred tax at the fourth day. Don't worry about it. Right now, whatever I am working on it, just focus on it. Okay? So that is the point. Don't worry. I will discuss a lot of things with you. Time by time. What are required from your side? I only required one thing. You must be very much positive. Be positive, be energetic, and believe on yourself. And two things you must remember with respect to SBR paper. Number one, passing rate is very higher. 50% more, 50% chance that you will qualify. Number one. Number two, you have to fight the situation accordingly. You have to fight the situation accordingly. Fight the situation. Not too much focus about if your conclusion is wrong. No, ignore it. You have to obey the instructions, whatever I'm saying to you. Ignore the matter of the conclusion. So candidates, I am here to discuss about IFRS 13 matter. Because of what? Because we need to discuss September to December 2019 matter. So once again, listen carefully. Whenever we calculate the goodwill, we need to identify the subsidies net asset fair value. That is called fair value measurement. So we are going to discuss the complexity related to fair value measurement with respect to IFRS 13. That's already examined September, December 2019. So people, are you getting the point? What we are going to discuss? Please reply me. Hello. Hello. Okay, that's good. Yes, be with me. So now, with one moment, at that moment, we are actually discussing two things. One side, IFRS 13, second side, the September December 19. A quick review of IFRS 13. A quick review. IFRS 13 is the standard about fair value measurement. What is the purpose of this standard? The purpose of this particular standard is to provide guidance of fair value measurement with respect to all accounting standard. Whenever we require, for example, fair value measurement guidance. Guidance. For example, we required IS 16. For example, revaluation, and we need fair value. The guidance provided by fair value measurement. We required IS 40. We can refer it. We required group accounts. We can use it. Not for only asset, also for liability. So that is the point. With so we will discuss a quick briefing of IFRS 13. Whenever we discuss about any asset or liability, we are more focusing on asset. More focusing on asset here. Whenever we need to get, to make a guideline about the asset fair value measurement. So this accounting standard says that the fair value of any asset is actually the price that we can receive to sell an asset, ignore paid liability, in an orderly transaction between market participant and measurement date. So candidates, what does that mean? Let's suppose we are standing at 31st December 2019 and we are measuring the value of measurement of the value of property, any property, for example land, for example building, any property, building. So what is the guideline? Number one, first guideline is that the measurement date is 31st December 2019, measurement date. The price of this property, so price means a buyer and a seller. So price will determine between the market participant. Market participant means buyer and seller. And the price should be like that an orderly transaction. Orderly transaction. Orderly transaction means simple word, not the forced transaction. Not the force means there is no coercion, there is no pressure to any buyer or to any seller. Not the forced transaction. For example, if I say that the seller become bankrupt and the seller is in a hurry to sell the asset, even not with the normal market terms, this is not an orderly transaction. Orderly transaction means in the normal circumstance, not the coercion, not the force. So whenever we are measuring the price of any asset, the price should be in a manner that's the market participant having ordered transaction. That is not the forced transaction. That means the normal transaction. So number one. Number two, further, whenever, whenever we measure the price, whenever we measure the price with respect to, for example, listen carefully. For example, we are measuring the property value because of revaluation model. Always value on exit price. Sir, what is the meaning of exit price? Exit price principle. Exit price means what if we are going to sell the asset now? What is the value of this property if we are going to sell it to any other? So exit price means we have to focus the market, not the entity. We have to focus the market, not the entity. Means if we are reporting our property in fair value, so fair value must be the value which the market is going to ready for the payment. So we have to focus the market, we have to focus the buyer, not to focus the entity. For example, you are the owner of a car and you wanted to determine the value according to IFRS 13. So you have to value your car not related to that how much the value of car or how much the worth of car with your point of view, how much valuable the car in with your point of view, rather than what the market is able to pay, how much the buyer is able to pay, or how the buyer can, how much the buyer can pay for that car to you. So that is called exit principle. So market based measure assuming market participant would use, not entity specific. That is the another point. Third point, third and fourth point, quickly. For example, you are a company. Candidates, are you hearing my voice clearly? Can you please reply me? Are you people, whoever the people are listening me, please reply me on the WhatsApp group everywhere. Oh, thank you very much. Thank you very much. Thank you very much. Thank you very much. Now move on. Furthermore, candidates, furthermore, listen carefully here. Furthermore, let's suppose one more thing. Class, listen this standard very carefully. For example, you are a seller of car. You are a seller of car. And you sell your car in three markets: Asian market, European market, American market. You sell your car, I'm sorry, in different markets. Asian, Europe, American. You sell your car in 3 different markets. Now your year ends. Your year end happened 2019 and you have an inventory of the car. Inventory of the car. So first of all, the issue is that you sell your car in 3 different markets. In 3 different prices. Prices are different in all markets. With the same unit. Prices of same inventory have it, sorry. Your same inventory prices are different. So accounting standard give you the guideline. Give you the guideline that at the reporting date, at the particular reporting date, for which price, for which basis of market you will determine the price, either Asian, European or American. Accounting standard says you must initially identify which is the which is the principal market. The principal market, which is the principal market, if there is one. Principal market means where the most number of transactions. Where is the most number of transactions? Most number of transactions related to market, not related to company. What does that mean? How many cars are sells in the Asian market? How many cars sell in European market in totality? How many cars in totality in the American market? If the data is available. Principal market means you have to search out, you have to determine the volume of the market. It's not about the entity, it's about the market. And take out where the highest number of units exist. Where the highest number of units exist, take that market. But what if the principal market, it's not determinable because there is no organized data? It is possible in the real world if the car is a regulated car having the data available, but maybe possible you are a pharmaceutical company, maybe possible you are software making company where the data is not available. If data is not available, then go for most advantageous market. Do remember, most advantageous market is entity base. Principal market is market base. First, determine the price based on principal market. If not available, go for entity base. That advantages. Advantages means these 3 markets exist. And for example, you sell in these 3 markets. What price you sell minus any transaction cost, minus any transportation cost. Means you have to calculate from the Asian market, European market, American market, each one, the price minus transportation minus transaction cost. All 3. And take out where you can get the maximum benefit. Maximum benefit means most advantageous market. That is the best one after both transaction and transportation cost. So candidates, once you identified the most advantageous market. After that, measure the fair value, price minus transport cost only. So make it very clear. If you identify the most advantageous market, you have to adjust transportation and transportation cost both. But whenever you finally measure the fair value must be measured price minus transportation cost only, not the transaction cost. What is the reason? A simple way. Reason not examinable. Huh? Transportation is the characteristics of the asset, but transaction cost is the characteristics of the market. I'm not telling you detail here. Last two points. If we need to determine the market, then that is the principle. But second last point is that if we have if we don't have any concern to determine the market, only one market exists. For example, you purchase a shares and shares are listed on the stock market. So at that case, no need for the determination or selection of market, only one market. For example, you purchase a shares of a company that is private limited. Company. So whenever the measurement aspect exists, what you will do? You will do that what inputs you will need to consider. The input is there any quoted price? Yes, the quoted price exists. That is level 1. L1, level 1. If there active market adjust, go for level 1. For example, you purchase the asset from the stock market. Purchase the shares from the stock market. Go and take out the price. You purchase the property from an active market, level 1. But if you purchase the property, there is no active market. You purchase the shares that is unlisted. Then go for level 2, level 3. Level 2 means observe the price. Same assets that having a same value in the different markets and adjust with the unobservable input. A very simple example is that candidates for level 2 and 3. I'm giving you one very simple example. For example, you purchase a property. Listen, here, that's a very important concept. Examiner normally examine this point. Listen, candidates. For example, you have a property at a remote area. Remote area means there is no proper civilization exist, but property here. That means no active market. Then what you will do for the fair value measurement? Accounting standard says number 1, level 2. Level 2 means take out the data of a property. Like if this property exists at active marketplace, at the place where the number of buying and selling exists. For example, take out the price of square feet rate of property. What are the price of resemble property if there is active price? What are the rental agreements? So level 2 is actually the market data. Listen here. You must have to write this. This is market data. External input. But you have to make the level 3 as well. Level 3 means entity data, entity information. Entity means what is the value of property by using the entity. That is called present value of future cash flow. Present value future cash flow. So you have to mix both the data, level 2 and level 3. But always accounting standard says maximize the level 2, minimize the level 3. So very simple. If your asset having a market, if your asset price is available in the active market, go and get level 1. If not available, then go for level 2, 3, but maximize the level 2, minimize the level 3. Candidates, last point. That is linked with the group account question. Listen carefully. Candidates, listen carefully. This is very much important. And this will reflect on this particular question. Non-financial asset. Listen carefully. Non-financial asset. Highest and best use that is physically possible, legally permissible, and financially feasible. Number one, what is the meaning of the non-financial? I'm not discussing right now the IFRS 9. Non-financial asset. Fair value, listen, fair value about non-financial asset. That is asset other than financial asset. For example, property. Property is not financial asset. Land, building. What accounting standard says, for example, if the property exists at a price of industrial purpose. This is the property exists for industrial unit. Industrial means, for example, factory. For example, it's about the factory. And you have calculated the value of this property, $2 million. But surrounding this property, there is the sea level. That is the sea. And government want to civilize this area for residential purpose. The government announced the residential societies here. And this will affect to this property, your area as well. And you have observed that if this property converted into this residential purpose, because sea level and the coastal highway is very nearby, so the property become $3 million. And it's legally permissible that property of industrial become residential. It doesn't matter you have taken the permission or not, but it's legal permissible. So accounting standard says, if this is the case about the non-financial asset, you have to take the value of the alternative best use. That is what the matter. Non-financial asset, highest and best use that is physical possible, legally permissible, and financially feasible. Candidates, have you got the point? What I said for the non-financial asset, please reply me. Do reply me. Don't worry, Gillen. If you have any queries, I will reply you on the WhatsApp group. Don't you worry. Accounting standard says if there is any non-financial asset, for example, property, having any alternative use, which is highest and best, then the price should be taken on that basis. This one. You have a property, I'm saying once again, you have a property, industrial property, that is a factory, for example, factory, whose market value 2 million, whose market value is 2 million. But government, this property location is just nearby sea. Government wanted to civilize this area and announce residential societies. This project, this government announced affect to the property, affect to your property as well. And you have identified that if this property not for factory purpose but for residential purpose, then the value become 3 million. So you have to determine the value of this property, not right now usage, but alternative best usage with 3 million. Subject to this is legally permissible, although you don't have a plan. I hope that you people now clear. Yes, yes, yes. That should be legally allowed. Number one, legal allowed. It doesn't matter you have an intention or not right now. Non-financial asset, highest best use that is physical possible, legally permissible, is a financial feasible. I hope that you got the point. Okay. Now, candidates, whatever we have done, including this IFRS 13, including this IFRS 13, you can work accordingly. You people have already the handout. I'm giving you 2 minutes to read this question carefully. We will discuss the A and B part of the question in this session, not the C part. A and B part. Please, I'm giving you 2 minutes to read the question. Please read this question once. Financial feasible means the fair value is much better than current use. Current factory having 2 million, but for if you move for residential, the project worth is more than that. That is called financial feasible. You please read the question once. Don't worry, Tajwar. In the future questions, more about the IFRS 13, then you will get more clarity about the level 2. Don't worry about it. Right now, focus on the non-financial assets matter. That is the key point for right now discussion. Yes, candidates, please do it. Shahzad Kumar, don't worry. you please share your question with more clarity with 2 examples. I will tell you at the break time, don't worry. Right now, focus on the question. I've already shared the questions to you people uh, before starting the session on the WhatsApp group or on the platform as well. Now it's time to start. I'm in now. Okay, candidates. Now I need a proper focus attention here. And don't worry about it. If you have a questions, queries, you have to jot, you have to hold it. We will work out accordingly. So now it's time to move on. Okay, candidates. Come on. Draft an explanatory note. Do remember with respect to consolidation question, there's no um, professional marks. No professional marks related to section A question 1. Section A question 2 related to um, professional marks. Okay. Draft explanatory note to the director of deployed addressing the following issue. How the fair value of factory site should be determined 1st July X4. 1st July X4, by the way, the acquisition matter. And why? And very important point is and why depreciated replacement cost 17.4 million unlikely to be reasonable estimate the fair value. 7 marks. Candidates, now listen. Next thing, calculation of goodwill arising on acquisition measuring the NCI at fair value and proportionate asset. Only calculation. And here the term how with explanatory note means you have to explain it. Discuss the calculation and allocation of Collinson Company impairment loss and why impairment loss would differ depending on NCI measured. Your answer should include calculation explanation of how impairment would impact on the consolidated financial state. 11 marks. 4 marks related to IFRS 2. I will discuss later about IFRS 2 matter. Now, let's suppose if you are sitting in the examination hall, you have read the requirement, and now it's time to move. Now, start. I'm sorry. Yes, candidates, you must be with me and focus on it. Leopold Company, the parent company of the group, undergoing rapid expansion through acquisition. Leopold has acquired 2 subsidiaries recent years. Collinson Company, Hammond Company. Current financial year end 30th June next year. First is acquisition of Collinson. Read it. Loplight Company acquired 80% of 5 million equity shares of Collinson 1st July X4. When? 1st July X4 for the cash of 90 million. Fair value of inside acquisition 22 million. Fair value of identifiable net asset 65 million. Excluding following asset. Collison Company purchased a factory site several years prior to the date of acquisition. Land property prices rises in area that had increased significantly in the years immediately prior 1st July X4. Nearby sites, do remember this is a factory, huh? Nearby sites have been acquired and converted into residential use. It is felt that should Collinson Company's site also be converted into residential use, factory site would have a market value of 24 million. Definitely, if you move for the residential, that's become 24. But if you convert to residential, you need to put some cost. Someone asked me about the financial feasibility. So Collison factory right now have some value. But if moves to residential use or alternative use, if it's legally permissible, that's become 24, but need to incur some cost, 1 million cost. 1 million cost to be required to demolish the factory and obtain planning permission of the conversion. Obtaining planning permission means you can get the permission, legally allowed. Collinson Company was not intending to convert site the acquisition. Intention is not matter. The matter is permission. And had not sought out planning permission at that date. Condition, if at the reporting date you haven't got the permission, no matter. You don't have intention, no matter. But that should be legally allowed. The depreciated replacement cost for July X4 have been correctly calculated 17.4. So they have calculated the factory matter. Candidates, are you getting the point? What is the case about? Please reply me. Are you getting the point? What's the case about it? That is the point. Whatever I have discussed with you, that was the standard, and this is the case. How is examiner connect standard with the examination points? That is the key point, candidates. I hope that you people are getting confidence related to the exam questions. Be patient, be patient. You will get the matter. What the question about? Number one, what the question about, candidates? What the question about? Now, it's you have a knowledge, huh? You have the knowledge. First thing is knowledge. Number two, apply the knowledge in a smart manner. Then you will be able to qualify the exam, inshallah. There are 7 marks having 2 points. How the fair value of factor size should be determined. And there is the another point, the depreciated replacement cost. Unlike a reasonable estimate. So fair value of factory side, that is the concept of non-financial asset with the best alternative use. Reliable estimate means fair value measurement with the input level 1, level 2, level 3. Do remember, if level 1 value exists, You don't need to go for level 2 and 3. Here, the factory, if having alternative use for the residential, clear values are given in the market value basis. Now, candidates, what about the solution? 1 minute. Sir, what about the solution? If let's suppose you are sitting in the examination hall, you have read the complete question. First of all, before attacking, you have to brainstorm with yourself. Talk to yourself. What is that about? Brainstorm. First thing is IFRS 13. Number 2, goodwill, both methods. Number 3, impairments. And then IFRS 2 complications. Take a healthy breath. These 4 items. Relax and then attack with the answer. Answer should be very much clear with the clear headings. If the question having 7 marks, you have to split all the things. Number 1, A1, fair value measurement of identifiable asset. So first thing is, if examiner mention how fair value of the factor side should be determined, you have to make a good heading. Don't need how to fair value this. Fair value of factor side. Just make this heading, because repetition of the exam matter, exam headings, repetition of things, it's no marks. And now you can work accordingly, candidates. Number 1, knowledge of IFRS 30. What is that fair value about? You have to put the definition. Fair value define the price which receive, sell an asset. I'm not here to read this with the normal market orderly transaction. For the sake of understanding how I put this, you don't need to put it. You just mention orderly transaction. Standard wordings. Fair value should focus on market focus. Market focus means exit price. Not supposed to entity specific. That's exit price. That is what market are going to ready. Market. Whenever we calculate the fair value, we have to consider that. We should have to report the asset at fair value. Means what if we are going to sell now, how much market ready to pay us? That should be the fair value. IFRS 13 fair value measurement permit valuation method to estimate fair value, including market based, income, cost based. Characteristics of the asset considered. Then non-financial asset. That's a matter. So first you have to put the reference, knowledge. Put the reference. Then case. The highest best use of the asset, residential property, not the current asset. Intention of, you have to put the name of the company. This will affect whenever you put the case, whenever you write the case, you have to put the name of the company. Don't ignore, deliberately put the name of company. Otherwise, examiner is, one thing is knowledge, another thing is apply. Either at knowledge side or either at apply. must have to refer the name of the company. This is compulsory. Intention of question not relevant, because this is not about the entity specific. But alternative use would be based on fair and reasonable answer. Candidates, relax. Inshallah, you will qualify. But the important thing is that your preparation should be in the right track. Are you getting the point what I'm saying? Are you getting the values from my lectures? How to apply the things? That is the key point. That is the key point. I'm giving you the direction how to move on. That is the key point. Candidates, that is the first point. That is the first point. You have done it. First point means out of 7, you got the 3 marks. Because here examiner particular mention fair value of factory that is buying non-financial asset. And why the fair value measurement depreciate with cost 17 point unlikely to reasonable estimate. Candidates, if we say that if we say that not residential but sorry, not factory based but residential, I'm sorry, on the residential base. So the price available, the market value available 24 million, but 24 minus 1, the price should reflect 23. But the examiner asking you that why not we are taking the 17.4 million, and the term use depreciable replacement cost. Do remember one point. Whenever examiner asks some particular words with you, that examiner asks why this depreciable replacement cost is unlikely reasonable. So now it become compulsory. You have to put some description related to depreciable replacement cost. The important thing is that the important thing is that you have to read it accordingly. You can read it. Planning permission, nearby such thing, and the fair value. Now you can read it. The fair value factory site should be value converted into residential use, since this cannot be determined standalone. Combined value land building is calculated. 1 million demolition and planning cost should be deducted, and the market value 24 million. So fair value land building 23 million, and total identifiable asset become 88 million. 88 means 65 is the other assets value, net assets, and 23 is related to this matter. Now, important point. Why depreciated replacement cost unlikely to be reasonable? Candidates, number 1, you have to explain what is the meaning of depreciable replacement cost. You have to focus one thing, huh? You have to focus one thing. One thing is market value. If market value exists, that means level 1. qualify. Then ignore level 2 and level 3. Another thing is depreciable replacement cost. What does that mean? Depreciable replacement cost. What does that mean? For example, let's suppose you purchase a car 1st January 2015, 100,000. Life is 10 years. After 2 years, straight line depreciation. Straight line. After 2 years, the book value become 80,000. This is a car. Now, depreciable replacement cost. Depreciable replacement cost means what if the same car, if we going to purchase newly at this time, we have, after 2 years, the car become old for 2 years. But what is the meaning of depreciable replacement cost? Depreciable replacement cost. What if we purchase the same car but new one at after that 2 years at this point? For example, car price become 1,50,000. Increases. New car become 1,50,000. Inflated. And if this depreciate in same manner, 30,000, 1,20,000. So that is depreciated replacement cost. But do remember this depreciable replacement cost is something level 2. Level 2 means, do remember, always level 2 means there is no active market exist of any particular asset. And we are taking the data of the market. What if these same asset, these same assets exist, but in the active market? Like your property is in a remote area. It's not in the civilized area. And you wanted to get the value of that particular property. What if this property exists at a civilized area? So what will be the per square feet? What will be the rental value like this? Then you are adjusting your cost. So number one, you have to explain that what is the meaning of depreciable replacement cost. And then mention that this is not the case with the factory side, because if we use residential use land, we are actually undervalued the asset. The market value for the asset, which is the principal or most advantage, need to be same as the entry price. Entry means your value already exists. So you can simplify your answer that we cannot apply the depreciable replacement cost here. Instead, the active market value level 1 already exists here. So candidates, that is how you will explain your answer accordingly. Now candidates, move for the next one. That is done, A1. Now A2, candidates, A2, a simple working of the goodwill calculation. A simple working of the goodwill calculation. Candidates, a quick review for the working of the goodwill calculation. A quick review. How to calculate the goodwill. Do you remember that? How to calculate the goodwill? Yes or no? Hello. Your reply is highly appreciable. Otherwise, how can I know that? The calculation of goodwill is not much challenge. Huh? Sorry. Okay. Number one, make a quick review with impairment. Accounting standard says goodwill you can calculate in two methods, full goodwill and proportionate method. Full goodwill, how to calculate the full goodwill? Number one, fair value, sorry, that is cost of investment, fair value NCI, and then fair value net asset subsidy at acquisition. So number one, NCI at fair value. Proportionate method, cost of investment, NCI only proportion. Proportion means take out the fair value of net asset, subsidy at acquisition, and NCI having a percentage of this, and then calculate the goodwill. You must have to know that. You must have to know that in proportionate method, NCI don't have goodwill sharing, but here NCI have goodwill sharing. That's the key point. That is the key point. Now the very critical point, that is about goodwill impairment. Very critical point about goodwill impairment. What does that mean, goodwill impairment? Number one, whenever the issue about goodwill impairment, you have to consider as a cash generating unit. As a cash generating unit. Cash generating unit means subsidy as a cash generating unit. And the subsidy as a cash generating unit, goodwill is a part. And this is very common point examiner normally examine. If there are some impairment test, we need to make it. So the first important thing, fair value of net asset, subsidy at impairment test date, plus goodwill. In case of full goodwill, no issue. Then recoverable amount, RA recoverable amount. Impairment loss if carrying amount greater than recoverable amount. But the second point, impairment test, fair value net asset subsidy at acquisition. Goodwill proportion method plus goodwill of NCI. Do remember it's notional. Notional means not recognized, but only for impairment test matter. Only it's not recognized. Not recognized. That's a key point. And then recoverable amount. And then impairment loss. Do remember, impairment loss not affect to notional goodwill. We will apply all these things on this question, huh? Don't worry. Furthermore, allocation of goodwill. Oh, sorry. Allocation of impairment. The very important point, number one, if specific absolute asset, if anyone. For example, there is some specific asset reason for the impairment. So allocate the impairment accordingly. Number two, goodwill. But do remember, with the case of notional goodwill, no effect. Number three, remaining asset, pro rata basis. Pro rata basis. No asset reduce value below its carrying about. Sorry, below its realizable value. It's all mentioned in this particular pocket notes. Don't worry. These all mentioned in this particular in pocket note. I just mentioned on these cases because I need to engage you. This is very valuable. These pocket notes are very valuable, huh? It's I put it a very I definitely incurred a very much effort accordingly. Sorry. All these things mentioned here, huh? This one. That's impairment of goodwill. This one. All these things mentioned here. Okay, now it's time for the question. Candidates, quick. Now what we will do? We will we will do a question accordingly. Yes, these two parts. 3 marks and 11 marks. Total 14 marks of this question. Goodwill working is very simple. But here I will tell you about all the things related to impairment matter as well as how to handle the description part with this solution. Yes, I will share you the solution. Candidates, I suggest that you people must have to take a break. So take a 10 minutes break, a quick break. 10 minutes break. 10 minutes break. And you, if you wanted to ask any question, do reply, do contact me on the WhatsApp. The break start from now. Candidates, it's a break time, huh? It's a break time. Hello, everyone. Now it's time to move on. Hello, are you ready? Someone asking about the format of the topics. Irshad, you are what you are saying about the format. This is not the calculation paper, dear. That there are some restricted format. Try to understand that you are the part of a strategic level exam. You are saying that pro forma of the answers. This is not F3. That's pro forma of the cash flows. Not like that. Pro forma of the balance sheet. Do remember, all of you, that's very much important. We are here to discuss for the right direction of the questions. There is no structured formats. My dear, please make your directions clear. You, it's a analytical is required. Whatever we are working or observing, that's a different point. If you ask about the format to the answer, so that is what the one rule that you must have to apply. That's pack, planning, application, and case. Yes, about the ethics, we discussed this point, how to make a proper format, but we cannot use the term pro forma. We will discuss how the standard things are work out accordingly. Sakib, you asked that, is there any wrong point? If you pick any wrong points in place of the right one, I means there are 4 points and including one conclusion, and you, for example, you wrongly answered 2 points, but 1 point is relevant. Examiner will definitely give you the right answer marks. For the wrong part, just deduct the part of the particular relevant aspects of this case. Otherwise, you will get marks of your the right answer, even of the conclusion accordingly. Yes, accounting standard aspect, I will discuss the point. From tomorrow, we will discuss the details of the accounting standard, and I will share you a complete list about it. Yes, definitely. Don't worry. Group accounts matter is valuable. Like IFR, I have discussed with you the IFRS 3, IFRS 13. That's a quick briefing, quick review of the standard. Okay, let's move, candidates. Let's move for more thing. Okay, this one is the matter. The goodwill calculation. Okay, come on. The goodwill calculation. How to calculate the goodwill in this question? It's very simple about the goodwill. The most easy part of this question, it's goodwill. The easy part of the question, that is goodwill. Impairment of the collection company and the goodwill aspect. So number one, what is about the cost of investment? Purchased, a quick matter. The cash consideration of the 90 million. That is the 90. A quick working. Okay, that's 90. Non-controlling interest at acquisition. It's very simple. Here, the fair value method. So the fair value of the NCI 22 million. Here the fair value. And fair value of net asset at acquisition. At acquisition 65 million. Other than that asset, that is 65 million. And we have calculated this 23. So 65, 23, that's become 88. And goodwill 24. It's very simple. That is the pro forma of the calculation. And what about the proportional? Proportional means 90 cost of investment. NCI proportion. Proportion means the 88 fair value of net asset in the 20%, that's 17.6, this one. And 88, that's the point, it's the remaining portion as the goodwill. So this is what the easy part, most easy part of the question. Do remember, not the 100% part of the question is complicated. Not the 100%. But some part is difficult, some part is easy. So do remember the important point. You will not fail if some hard element and you put your best effort. But you will fail, your paper will flunk if the situation becomes panic for you and you mess the hard part with the easy part as well. So whenever you start the working of the paper, isolate what are the easy parts and get the quick marks of the easy. And then for the hard part, you just put your efforts. Discussion about the impairment. Candidates here, the examiner mentioning that impairment. Definitely, impairment aspect is not about at acquisition. It's about post acquisition, like reporting date. What is about Collison incurred losses? 30 million 2000 exit. Incurred losses, that's indication. And an impairment review was performed. Recoverable amount of the Collison assets estimated. Recoverable amount 100 million. Included assessment was the only building which had been damaged in the storm impaired to the extent of the 4 million. The carrying amount of the net asset 30th June exit. Included the assessment with the building which had been damaged in the short term impaired to the extent 4 million. Okay, that's specific asset damage and impairment maximum 4 million. The carrying amount of the net asset including fair value adjustment acquisition, excluding goodwill, this one. So this one is the point. Land, building, other plant machinery, intangible assets other than goodwill, current assets, the recoverable amount. Recoverable amount doesn't mean the impairment as recoverable amount. Recover means that's the realizable value of 22. None of the asset of the Collison, including impair, have been impaired previously. Collison don't have the policy of revaluing assets. Okay. Now what's the requirement, candidates? What's the requirement? What's the requirement? How much sorry, I'm sorry. discuss the calculation and allocation. Said discuss the calculation. Means whatever you calculate, you have to write it accordingly. Means explain the accounting treatment. Calculate and allocate of the impairment loss list. And why impairment loss differ. How NCI are measured. You know that NCI are measured in two parts, two possibility. Fair value and number two, proportionate method. Fair value method, proportionate method. Your answer should include calculation and explanation. Examiner particular mention calculation, explanation, how impairment impact on consolidation. So candidates, number one, that is about the working. First of all, you have to mention the point. Knowledge means IFRS. Whatever we discuss above, you have to write it. You can ask me a question, sir, is it compulsory that we have to write it first, then calculate second? No. 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 It's not compulsory. You can calculate first, then write it accordingly. No issue at all. But separate manner. In a separate page, the discussion, in a separate page, calculation. You can read it accordingly. I will share the matter. That is what all the matter. That's all the things how to work out accordingly. Impairment. Number one, impairment as a cash generating unit. As a cash generating unit, explain the cash generating unit, and then allocate first with the goodwill, then other assets in the following order that we have discussed. No asset will be reduced below that level. You have to work out accordingly. Now it's time for the impairment. It's very simple. Impairment, how to calculate the impairment? That the carrying amount of net assets given in the question 106. Full goodwill method, fair value method 24. That's 130. It's very simple. The recoverable amount that's given 100. Impairment loss 30. I hope that you people are with me. 30 impairment loss. Now how to allocate? Number one, to the asset, particular asset 4. Then goodwill 24. So 30 minus 4 minus 24. Remaining part 28. Sorry. Remaining part 2. But do remember that two important points in this case. Examiner particularly mentioned, you must be with me, that current asset recoverable amount is 22. So we cannot impair. Don't impair. And the damage asset impairment maximum 4, not more than 4. So these two things have done. Land building related to 4. Don't impair. Goodwill allocated. So remaining asset, that is 2, allocated between these two assets. 15 and 9. So it's simple. 2 divided by 15 plus 9 and allocate accordingly 15 and 9. And it's a very basic concept since you have since F7 you were working accordingly. Do remember one point? Examiner particularly mentioned the fair value of NCI if you are working for the full goodwill. Otherwise, mention the proportionate method. So, examiner here categorically explain the working. So, whatever you have done, whatever you have done, you have to explain it. Whatever you have done. That is damaged building, impaired 4 million, charged to P&L, 4 million already allocated to land building, 26 remain, goodwill, write off, expense to statement of expense and in the statement of P&L, remaining 1.25 plant machinery. This is the working. 0.75 allocate to the remaining intangibles. Now, candidate, a very important point. A very important point need to consider. You have to mention the working here. The original value, that is 60, 15, 9, 24, 22. Do remember, this is the full goodwill method. And these are all subsidy assets. So all these belongs to parent and NCI, including goodwill. Impairment allocated in this manner. And revised carrying value, this one. If you allocate with the double entry, if you required it. So number one, goodwill credited 24. Other assets means land 1.25, 0.75. That is 4 plus 2 is equal to 6. That means this is total 30. 30 should be allocated accordingly. NCI and this one. You have purchased 80% subsidy. Candidates, is that clear, all of you? The important point is not only how to calculate, but the right answer as well. Hello. You can explain the concept only, Derek, with your own wordings. We have already discussed this point. Yes, we will discuss the matter of the step acquisition and another points as well. Okay, class. Proportionate method. Examiner categorically mentioned that. Categorically. Here ask. Categorically ask candidates. Quick. Why two different methods? What's the difference between two different methods? So if examiner mentioned, discuss how and why method differ, these have allocated marks. Don't ignore. You have to explain the proportionate method, this one. And you can work out accordingly with the notional goodwill. You know very well the notional goodwill only about 19.6 divided by 80 into 20. It's only for the working of recoverable amount. Sorry, impairment loss. It's not uh, it's not recognized. I will give you the solution of this matter. You can check it. The only purpose of this question is to explain the point, how accordingly work. So candidate, that is all about this question. You can read it, the solution, same as it is. We are now moving for another part of this group accounts. Candidates, another part of the group accounts. Another part of the group accounts is this. Listen carefully. What I'm going to discuss with you. Listen, candidates here, listen. My next discussion about we started the session on that basis. Whenever we start acquisition accounting, we need the fair value of the net asset subsidy, and we discuss the fair value matter. Now, another important part, what are the matter of the cost of investment? What are the matter of the cost of investment? At acquisition date, whatever the parents deliver, that is cost of investment. That should also be at fair value. That is cash, that is shares, that is loan notes, whatever paying. That is deferred consideration. That is contingent consideration. All these aspects. We need to allocate accordingly. Candidates, listen here. Examiner regularly asks very important things, and you read to accordingly. Number one, that is about the fair value of the consideration transferred. This topic is very much critical. The consideration, the principle is the consideration transferred at fair value according to IFRS 13, calculated at acquisition date of. The transfer assets of acquirer, the liability incurred by acquirer, liability means deferred consideration, contingent and equity shares. More specifically, number one, if there is some issue related to deferred consideration, you have to consider. Deferred means you have committed to the ex shareholder of the subsidiary. Actually, parent acquired the subsidiary. Huh? So payment to the ex shareholder. Now, ex shareholder not the part of the subsidiary. Huh? So some of the consideration immediately paid, for example, cash. But some of the consideration committed will pay later. For example, cash will pay later. If I say cash will pay later, so acquisition date, that should be at fair value. So cash consideration fair value is equal to the present value of future cash flow. Since F7, you are studying the same concept. And subsequently, the cash consideration should be unwound, but not affect to goodwill to the profit and loss account. Sir, is it possible? This is SBR point. That company parent committed to the ex shareholder that we will pay you the share consideration in later date. Yes, is it possible that we will pay you the shares later on? We need to work out the fair value of that one as well. But if any commitment about providing the shares, subsequently, after the reporting date, there will be no adjustment. Once you commit about the shares like IFRS 2 share option, Subsequently, you will not change the value. That is what the deferred point. That is what the deferred point. Sir, there is a concept of deferred. Deferred means confirm, have to pay. No chance to withdraw. Something is contingent considered. Contingent means it may be possible that we will pay or not. To be cash or to be shares, both possibility. At acquisition date, even though the chances is lower, but you have to put the contingent consideration value. That's the fair value, considering probability. Subsequent, we will discuss here. Read it. If subsequent means, for example, listen carefully. Listen. Parent acquire the subsidy. There is an exam question related to this. Parent acquired subsidy and committed that 1st January 2018. Committed that 1st January 2019, after 1 year, I will pay you the cash, but contingent. Date, sorry, I'm going to change the date. 1st January 2018 and after 2 years, 1st January 2020. Pay the cash that is contingent based on certain condition, or shares based on certain condition. So our issue is that right now, our issue is that in subsequent time period, subsequent time, if the situation change about cash, situation change about shares, should we adjust goodwill? I repeat again, if something about contingent, we have to put at acquisition date in the goodwill. Yes. At acquisition date, we have to put at goodwill. But subsequently, if the situation change, COVID-19, a lot of situation change, can we change the goodwill? The answer is there. Accounting standard says if change is due to additional information that affect the position at acquisition date, then goodwill should be measured. And this is the limit of 12 months. Sir, what does that mean? Sir, what does this mean? Additional information based on acquisition date. Read this. You will get the point. For example, at 1st January 2018, we are estimating contingent consideration, but we don't have right information. So IFRS 3 allowed the provisional figures. Okay, take out the provisional figures. Take out general estimations, margin of error, but you have to write it at acquisition date. This is provisional figures. And if this provisional figure subsequently change, means some information arises related to this provisional figures. Oh, at acquisition date, there was some issues that to identify the figure. Then we will change the goodwill. But the timing is only 12 months. Read this example. Candidates, read, broaden your mind. For example, you will make it clear. P bought 100% shares 31st December X1, 60,000. On acquisition date, it was estimated at fair value, 40,000. For the year end, 31st December X1, P would consolidate net asset 40,000, goodwill 20,000. Estimate further information indicate fair value of net asset. Same rule for net asset, same rule for cost of investment. Acquisition was 50,000. Examiner particular mentioned that indicates the fair value at acquisition. This is belongs to acquisition. This information determined within major period and retrospectively adjust. And we will adjust the goodwill. So what we are talking about? We are talking about something contingent. Subsequent adjustment of contingent. But candidates, if change is due to any other reason, for example, parent acquired subsidiary and committed for cash, committed for shares, for earning targets. This is not about the provisional figures. And this earning target provisional values here and calculate goodwill. Subsequently, you have identified that the earning targets fair values means estimations change. It's not possible to adjust the goodwill. Not possible. Never ever. No retrospectively effect. No retrospectively effect. No effect on goodwill. Goodwill not affect. Sir, if goodwill not affected, then how to adjust the change? In equity instrument, you cannot change. No effect retro, no effect um, prospect. But cash consideration, any change in fair value, adjust with the profit and loss account. Whatever I say to you, candidates, these are the challenging parts. You can apply here. Read carefully the example. Examiner already examined with you. Read it, candidate. Please read it. Don't worry, Calvin. You will get the point from this example. I will discuss only this particular point. How a public company 60% interest, another company, 1st January X1. 160 payable immediately cash. 120 31st payable 31st December. That is deferred. Deferred means confirm have to pay. Third one, an amount equivalent to 3 times of profit after tax for the year end. Amount payable 31st March. 3 times of the profit. And 5 million fees of due diligence. That is not part of the goodwill. Our only point is this. 1st January X1, the fair value attributable to the consideration based on profit, 54 million. Based on profit. That is acquisition date. And that is what, how to, you must have to incorporate the goodwill. Subsequently, 31st December X1, fair value considered 65 million. This 54 is not considered as provisional value. It's a genuine fair value. But subsequent, the situation become changed. This 65 is not actually the adjustment of acquisition date. This is not provisional. Examiner particular mention you in the case of provisional that this 54 is the provisional value. If not mentioned, ignore the term of the provisional. That means this is the subsequent change. And change arise due to reason of the expected profit. Number one, the following amount recognized consideration transferred for the purpose of goodwill calculation. And this contingent consideration at fair value, that is 54 million. I hope that you got the point. Furthermore, the deferred consideration initially measured at fair value, present value. Interest is then applied to the period. This is not the point. You will read it accordingly. Important point is contingent. This one you have to read it. Contingent is measured at fair value and it's a liability. Must be remeasured each year at the date of payment. 31st December X1 fair value consideration rise in this. The increase 11 million charged to P&L because even though change is within the measurement period, it is a result of change in expected profit post acquisition rather than additional information regarding the fair value at acquisition. Candidates, are you getting the point what I'm saying? Yes, if something error, if something provision within 12 months, you can change it. I've already discussed the provisional point. Boy, Hamza, I've already discussed. This 54 million already given there. Okay, what are you saying? This 54 million already given in the question. That is the question. That's 54 million. Examiner already mentioned that the fair value is 54 million. So what's the problem? Okay. Okay. Next point. Sir, is this point ever examined in the question? Yes. This exam caliber question, and furthermore, this point already examined, and I will give you my YouTube link. You have to watch the video uh, before the next class for the specimen one for two questions. Hardly 1 hour video, don't issue. Rest you can read it accordingly. It's a very simple point, whatever here. Uh, Furthermore, I'm going to discuss the points. You can read it accordingly. I have done it. Okay. Two things I'm going to discuss here. That is about the, you know, that associate. Uh, Number one, associate, investment and associate. Okay. All done about the, all done related to the group aspect except change in group structure. I will discuss the change in group structure. Yes, your question is right. Um, Irrespective of falling within the measurement period, we will still not adjust it retrospectively. Only goodwill only adjust where two conditions meet. Number one, initial the goodwill calculated by the provisional value. Number one. Subsequently, the provisional values adjustment identified during 12 months. That's all. Other than that, goodwill figure never ever adjusted. I repeat, goodwill only adjusted if particularly mentioned at acquisition date we calculated the goodwill with the provisional figures. Subsequently, the provisional figures adjustment required only within 12 months. After the 12 months, even the adjustment of the provisional figure, goodwill adjustment not possible. Is that clear, all of you? Okay. Candidates, next one. Listen carefully. If investor, very important exam question is coming soon. We need to discuss accordingly. Investor get significant example. Shahzad, I have already given the example. We have already done the previous two examples over. You can read the uh, this particular notes, and if you have any confusion, do reply me on the WhatsApp. I will definitely reply. But we have already done with the examples. Okay. Further, I will give you one more question about it. You can watch from the YouTube. Okay. 1 minute. Okay, candidates. Investor gets significant influence. If the investor get significant influence, what is the meaning of significant influence? If there is something about the associate matter, investments, you have to mention the term significant influence. Significant influence means you have a power, investor have a power to participate in the financial and operating decisions. And only participation, not for the veto, not for decision making. Financing and operating policies are this: representation of the board directors, policy makings like this. Normally, 20% and more called associate. If less than 20%, there may be possible some contractual arrangement. In the normal circumstances, there is no contractual arrangement. You must have to clear one important thing, that contract investment in subsidy and investment in associate, it's not about contractual arrangement. It's only about the relationship. Relationship in terms of control, relationship in terms of significant influence. What about the equity accounting? You know very well equity accounting. Equity accounting means not to consolidate, not to consolidate, but investment plus sharing and post-acquisition reserve. Reserves in case of profit to the income statement. In case of equity, other reserves, that's to the OCI. And that is the part of the statement of financial position. That is simple associate. Furthermore, other than associate, another part, that is IFRS 11. Very important, IFRS 11. Candidates, listen carefully about the IFRS 11 here. At least 5 minutes we have to put about the 5 minutes for 1 minute. One moment, please. Okay. Listen, a quick review, a quick briefing. Candidates, IFRS 11. IFRS 11. Candidates, IFRS 11. What IFRS 11 says? That is joint operations. Joint operations. If investor, sorry, joint operations means either joint arrangement or joint venture. What does that mean? What does that mean? For example, let's take an example. A company A, a company B, a company C. A is a builder, B architect, C financer. All three have their own business. Builder construct the building, architect architecting, financer having different financing. But for any particular project, they meets together. For any particular project, they meets together. That is A, B, C. And this arrangement is contract based. The important thing is contract based. Do remember, IFRS 11 will not open if there is no contract. If there is no contract. If there is no contract, then it's not possible to discuss the thing about the IFRS 11. The contract matter is the most important thing. The contract matter is the most important thing. So the important point is the contractual base arrangement. If this arrangement exists, number one, there are two possibilities. There are two possibilities. non-entity based structure. Non-entity based structure means only project. And number two, entity based structure means A, B, C join together, come together, contract together for a particular project to construct a bridge. That is only the project. They haven't established any entity, no business. But it may be possible that they have established a business, a, a firm. They have established a business, a firm. So accounting standard says that if there is no entity arrangement, if there is no entity arrangement, accounting standard says that this is joint arrangement. If there is entity arrangement, it's a joint venture, but entity arrangement at both sides. What does that mean, sir? If the joint operations without entity structure, that must be joint arrangement. But if the joint arrangement based on entity structure, it may be joint arrangement, it may be joint venture. Sir, how to distinguish? Wait a moment. Before distinguish, one thing very important you have to clarify. A practical example. There was a venture of two companies in a worldwide. You know that Sony is a company, exists right now. Ericsson is also a company. They were come together called Sony Ericsson as a joint arrangement. Sony having independent business, Ericsson having independent business. They come together with a joint arrangement, Sony Ericsson. Very important point you have to consider that in IFRS 11, we are discussing at this point, not this. For example, Ericsson having a subsidy, having associate, and having a joint arrangement to how to report by the Ericsson the joint arrangement. Same case Sony. We are not discussing about the term Sony Ericsson. So in my case, our position, for example, with respect to A having a subsidy, A having an associate, A having joint arrangement with the ABC. Now, before reporting that, before reporting of joint arrangement, we have to distinguish the joint arrangement as a joint, joint operation as a joint arrangement or a joint venture. So here, the reporting as joint operator. Here, the reporting as venture. That is what the accounting allows. Candidates, that is what the accounting standard. You have to distinguish either as a role of joint operation or as a role joint venture. It's all mentioned in this handout. You can easily distinguish. Very important point is that either joint venture or joint operations. Joint arrangement always based on contract. Always based on contract. That is a key point. There are different accountings of both arrangement. This example will make very clarify. Yes. I will tell you one accounting principle here. In the case of joint arrangement, you know that accounting, joint venture accounting, joint venture accounting is equity. Simple. Joint arrangement accounting, proportion. The point of proportion I will discuss later if I have time. But for my for me is for me at this point, the important thing is that to distinguish between joint arrangement and joint venture. Candidates, how this point examined recently example March June 2019. This is the question, a very critical question. How to examine? Candidates, please read this question. Read this question now. These type of questions are very critical, candidates. Don't worry, you will get the handouts. Focus right now, working. Very critical question. Normally, what I said to you yesterday, we will discuss that particular item in P2P, most of the things where you get the challenge, where student stuck, where examiner deliberately twists you and result become flunk. These are the reasons. If I know very well, with your normal studies, you are very much champion about joint arrangement accounting, joint venture accounting, that's simple equity accounting, and even to distinguish. But the important point is this: how to handle this type of questions. Aisha, the accounting standard name is joint arrangement. ABC, A company has a joint arrangement at ABC. Now in joint arrangement, we have to distinguish. Either we have to report as a joint operator or as a joint venturer. If the entity based structure and meeting other criteria as well, I will discuss later, then this is called joint venture. And as a venturer, we have to report by equity accounting. But on the other hand, as a joint operator, we have to report as a proportional consolidation. Proportional means proportion shares. Now read this question. Advise the director of crypto how the above issue should be accounted for with reference to relevant accounting standard. Number one, crypto operates in the power industry, owns 45% of voting shares in Karan. Karan has four other investors, owns remaining 55% of the voting shares, and are all technology companies. The largest of these holding 18%. Karan is a property developer and purchased property from its renovation potential and subsequent disposal. Crypto has no expertise in the area and individual in the renovation and disposal of the property. Board of directors of Karan makes all of the major decisions, but crypto can nominate up to 4 of 8 board members. Each of the remaining 4 board members are nominated by each of the other investors. Any major decisions require all board members to vote and for there be clear majority. Means crypto has 4 board members, but total board members are 8. That's the critical. And any major decision required all board members to veto, and for there to be a clear majority. Crypto would like advise whether or not to account for the current under the IFRS 11. Candidates, before attempting this question, I need to discuss a very important point with you. Last moments of the class. Rest we will discuss later. You have to read through these definitions. Number one, what is the meaning of joint arrangement? Joint arrangement means the arrangement when two or more parties have joint control. What is that term? Joint control. Answer me. In the case of subsidiary, parent has independent control or joint control? Answer me, please. Answer me. Independent control. Parent over subsidiary having independent control, candidates. But here, the situation about joint control. In the case of subsidiary and associate, never use this term contractual. Joint arrangement based on joint control. How to get joint control? Joint control is the jointly agreed sharing of the control of arrangement, where exists only the decision about the relevant activity, the unanimous consent of the parties. Unanimous means mutually agreed. Almost all. That is the clear distinguish between the joint arrangement and the subsidiaries or the associate. You can say to me, sir, if ABC, sorry, Sony Ericsson You can ask a question. Ericsson having 40% right in Sony Ericsson. So simple associate? No. If contract made, mutually agreed, uh, contractually sharing control, then Ericsson report according to IFRS 11, not called the associate. The compulsion of the joint arrangement is to make the contract. But in the subsidiary, in the associate case, there is no wording of the control. Sorry, there is no wording of the contract. I have mentioned that joint arrangement following characteristics. Parties are bound for the contractual arrangement. You have to write this. And contractual arrangement means two or more parties joined together, unanimous consent, unanimous, not independent. This is, I must say one word. In IFRS, there is no word of the partnership. But this is what called partnership. Don't write it just for understanding. This is what called partnership. This is what called partnership. And the final point about this issue. Candidates, I know that you have a question that, sir, if there is entity-based arrangement, this may be joint arrangement or joint venture. How to distinguish between two? Candidates, I'm giving you a very clear example. I'm giving you a very clear example. Listen, last point. For example, Mr. HQ, Sen Kazi, plus ACCA combined together. Sen Kazi having own business, ACCA having own business. To purchase a land for mineral extraction. Purchase a land for mineral extraction. There is a mineral extraction. And this is a project. They have combined for the project only for the project basis. They have not registered any business. Only project. Once project eliminate, sorry, one project done, the arrangement closed, become closed. If this is an issue, that's called no entity. That is no entity. And that is called joint operations. And the question is that how Mr. HQ report this joint operation as a joint operator. That is called asset liability revenue expense proportion. You can read from the notes. Proportion. But on the other hand, Mr. HQ plus ACCA joined together for a mineral extraction business and establish an entity for this purpose. Entity name HA, registered, proper balance sheet, proper income statement. So here are two possibilities. Number one, number two. Is this and if this entity, if this entity is equal to asset minus liability, or number two, if this entity is equal to equity, there is a difference. Sir, what is the difference? Entity, asset, liability, entity, equity. It means if Mr. HQ having the asset by its own name, having liability own name, means H, HQ plus ACCA, HA, registered the business, but the asset and liability belongs to partners, belongs to individuals. If this is the case, then we must say this is called joint operations. But if Mr. HQ and ACCA registered a business and all the asset, all the liability not belongs to individual but related to entity, related to entity, the asset name belongs to entity, the liability belongs to entity. If this is the scenario, this is called business and this is called joint venture. And then Mr. Hussain report as a venturer, as a venturer, and by equity accounting. Sir, venturer reporting, equity accounting. Candidates, that is what I have briefed you about all the arrangement. Now, the point is that the point is that how to distinguish between examiner examine this complete case, then how to account for the complete scenario. I must recommend you to attempt this question. I know that more than 200, 250 people are watching this videos, but I strongly suggest you two things. I strongly suggest you two things. Candidates, two things I strongly suggest you. Number one, you have to attempt this question and share me on the WhatsApp of your own solution. I will discuss this point on tomorrow, but share me your solution. Please be innocent with yourself. Be innocent with yourself. Have to write the answer and share me on the WhatsApp. I will reply you accordingly. But please be honest. You have a solution below that question, but don't refer it. I will, if you people share me the solution, I will definitely reply you. And based on your mindset, I will deliver the reply on tomorrow. That how much mistakes you have made and what should be the right direction. Whatever I'm saying since last 2 days, I know that we have already done the group matter, and in fact limited part. I've also discussed change in group structure by tomorrow, including the ethics and the more standard parts as well. But this is the right direction, candidates. Candidates, furthermore, I must say that you have to attempt, you have to 1 minute. Till now, whatever we have done, exam questions you can watch with my YouTube channel. Number one is specimen 1, specimen 2, and number 2 September 18. These two questions. I have discussed specimen 2 and September 2 question 1. I strongly suggest that you have to attempt above question and must have to watch maximum 1 hour video. That particular video you get a good idea about the complete scenario of the group accounts, how to handle it. I will share you the link of the YouTube. Uh, one moment. I will share on the WhatsApp group as well as the platform as well. So that is all for the today's. The tomorrow agenda will be the change in group structure and some accounting standard with the fixed part. Tomorrow I will extend the session for more 20 minutes as well. I mean, I will end by 11:45 or 11:50. I will start by 8:30. Do you have any more question to reply me or do ask me here? Anything you wanted to ask? Please reply me about the constructive feedback about the session. The purpose of this session is to establishing a bridge between the expectation of the examiner and you people, whatever you're doing. So main focus that where you are struggling more for that points. I have already discussed the sequence of the answers that apply the rule of the pack, and I will discuss more and at least 10 to 15 times more. Yes, I will definitely discuss about IFRS 9, IFRS 15 as well. Focus, focus on quality. Just quick briefing of the topics and apply to the SBR 5 attempts paper plus specimen paper. Yesterday's lecture already uploaded. YouTube channel link already uploaded. You have to watch the specimen 1 and September 18 solution on the WhatsApp. Don't worry, Aisha. I have already discussed and I will also arrange the matter once the topic conclude. Yes, by tomorrow, by first 30 minutes, the topic will, by first 1 hour, the topic of group accounts will conclude with the group change and group structure. And also I will conclude the sequence of the answer you have to develop. But there, this is what the sequence already sequence. Let's say, Aisha, uh, for example, this is the solution of Luplet. I will share this solution as well. This is what you can get a good idea about the sequence. Beta, you can get a good idea. This is what the solution. You can get a good idea. Okay, you can get a good idea. Quick briefing of the topics plus last 2 semesters exams. Oh, sorry, plus past paper exam with a specimen enough. Quality, quality. Yes, I will share. The chances of cash flow is very low, but cash flow can be examined as a performance measurement. I will discuss in during day at day 4 or day 5. In Pakistan, the paper will be uh, manual. That's a center-based exam. Don't worry. No, 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 no. Your answer must not. It's not possible. Examiner answer is ideal answer. You just put your best effort. Three parts, but daily I will extend at least 15 to 20 minutes. IFRS 3 does not apply to the joint venture operations. Joint operations, the part of joint operations related to uh, joint ventures, related to joint venture. As a venturer, apply IFRS 11. Sorry, as a venturer, apply the IS 28. Aisha, you asked that what should we do in the last 14 days? Just quick review of accounting standards and the topics and focus on the past papers. 5 past papers and 2 specimen. Yes, by the end of each topic end, I will share you the question. You can, candidates, don't worry. Tomorrow I will discuss. You can view here. It's be ready for ethics. Are you watching that in front of the screen? I have already ready for the ethics matter, but we'll discuss tomorrow. Ethics. Tomorrow will be the another day for the groups plus ethics plus more accounting standard. Current issues matter will discuss 50 last 5 days. You can ask me any of the question, but please make a right direction. Make a right direction. This is what the right direction, candidates. This is what the right directions. I must say that examiner is very concerned about that. Your direction of the studies must be in a right manner. Practice of the writing especially. Anything else? No issue at all about the, if you have done, I say if you have done about your uh, if you have covered your topics with the examples plus past paper of SBR, that's enough. Your concept must be very strong with the briefing of the topics plus exercises, including, and that's apply on the past paper. That's all. Yes, group should be very much interactive, and you can ask me. Yes, associate can be examined. I strongly suggest all of you to give us the constructive feedback on the WhatsApp group or the platform about the today's session. Please, 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 it's a request to, if you really feel that you are getting more value of this particular sessions, do reply me. Do give your best constructive feedbacks on the WhatsApp. It's a request to all of you. The right study approach is that whatever I saying to what I suggested to you, you must have to apply accordingly. No, the timings are strictly um, very much. It's not possible to change the time. Please, 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 do reply. Okay, candidates, take care a lot. Three things you have done. You have to attempt the joint venture question as I shared with you. Number two, watch the video about the two papers, one specimen. Number two, September 18. But I strongly suggest that before watching the video, you have to attempt by yourself and then watch the video. Thank you very much. Take care a lot. Do remember in your prayers. And Jazakallah khair. Assalamu alaikum. Assalamu alaikum.